Did you know Belgium is one of the highly taxed countries in the world? In fact, it has the highest tax rates in the Western Europe. But what does it really mean? Can you survive with that? And how much do you have to pay out of your own pocket? That's what we will be discussing here. But before we jump into the numbers, we should know that the tax we pay goes to fund their world-class healthcare, affordable education, and social security programs. That's what I found on Google before I came here. After living here for a year, I was surprised to understand that the commune from Ghent, the city where I live, provides free classes not only for learning languages and doing cultural integration, but also for software development, AI, and SAP administration. Amongst being many free courses that they provide, which is nuts, because these certifications and trainings are very expensive. But they do it for increasing the skill set and employability of their citizens, which in return helps the country's economy, I guess. But now that we have a little idea about the benefits, let's talk about what do we have to pay for it. Like many other places, personal income tax in Belgium depends on your income. The more you earn, the more you pay. Tax brackets for income year 2022 are applicable to net taxable amount after deducting the social security and professional expense. You can see the tax rate for each bracket on your screen. For example, if your annual earning is about 13,870, then your tax rate is 25%. If you earn 24.48 thousand euros per year, then your tax rate goes to 40%. If your earning jumps to 42.37 thousand euros a year, then your tax rate also jumps to 45%. And anything above that is taxed 50%. But these tax rates are applicable only after deducting the social security from your gross annual income. You heard it right. There are more taxes to pay. Foreign employees with short-term assignments in Belgium are exempted from paying social security depending on their home countries. And if you want to learn more about that, then I'll be linking a very descriptive article from PwC in the video description. But in general, you pay 13.07% towards social security. So once you subtract that social security plus certain professional expenses, then only the tax brackets we discussed earlier are applicable on your net taxable income. I always wonder, if you are a Belgian working class with no sort of property like a car or a house besides your company remuneration, then how do you make it here? I guess the whole system is designed to favor equality, where you don't really need to make it. For example, you don't have to think about saving for sudden emergency expenses. For example, if you have a medical emergency, then most of it will be covered through your insurance. If you lose your job, then you have unemployment benefits. So things are good on that note. But imagine if you are a couple in Belgium which does not own a house or a car, and only one person is working. If he or she is earning 60,000 a year, which is a decent amount, then 13.07% will be deducted for social security, which will leave them with 52,158 euros as a net taxable income. We haven't deducted any professional expense here because it will make the example very simple. Now, out of that 52,158 euros, deduct another 50% as an income tax. Then you will be left with 26,079 euros. When you divide that by 12, although the annual income in Belgium is divided by 13.9 months instead of 12, but for simplicity of the example, let's take 12. Then you will be left with 2,174 euros a month. Remember, it's a couple that doesn't own a house, so they have to rent one. And a decent house for two can cost you anywhere around 650 to 1,000 euros plus energy costs. Especially during this time when the energy costs are very high, we can assume that 1,000 euros a month will be gone towards your rent and utilities. I mean, you can survive with 1,200 euros for food, clothes, and certain leisure activities here in Belgium, but it is extremely tight. In such cases, if you wonder how anyone can buy a house, then it is a question to me too. If you ask, what if a couple decided to have a kid? Then there is a way to reduce your income tax. If you have children, then your tax-free allowance can be extended beyond your personal allowance, depending on the number of children you have. It can be well explained with a table. For example, if you have one kid, then your non-taxable allowance will be increased with 1,650 euros. If you have two kids, then that allowance will go to 4,240 euros. If you have three, then that will go to 9.5 thousand. For four kids, it will go to 13,360 euros. Anything above four kids, you'll have 1,650 euros for every additional kid on your non-taxable allowance. Yeah. So as you grow your family, there are ways to sustain. Also, for tax purposes, many companies do provide company cars to their employees, which can relieve you from a significant expense. But this is sort of a reality about what you can expect to earn here. I mean, people do have high income. Depending on their profession, it might differ. But for corporate jobs on partner level positions, I've seen people crossing 2 to 300,000 mark. But if you come here after watching a video about software engineers in California, then that's not the case. But in conclusion, you can definitely survive with high taxes while enjoying the happy life. That's about it for tax brackets in Belgium. And if any of you believe that I might have forgotten to add something, then feel free to post them in the comments. And on that note, thanks for your time and pay your taxes.